Good day, everyone. Welcome to Global Government News. Today is Tuesday, October 12th, 2010, and I'm Darko. Welcome to this economic news bulletin here. And I'd like to start off by asking my new listeners to check out GGNonline.com. That's my website. You can find the recent videos on there, along with some personal information on who I am and what I'm doing here. Again, that's www.ggnonline.com. We're going to move into this first article, which is from Reuters, and I have a bunch of economic news, and I'm just going to fly through a lot of articles today. It says Wall Street ends higher as Fed seen easing soon. Talking about monetary easing, or printing of, or buying on bonds and printing more cash. The U.S. stocks hit fresh 5-month highs on Tuesday as details from the Fed's latest meeting show the U.S. central bank may once again flood markets with cheap cash before long to further boost growth. It says the minutes from the Federal Reserve's September 21st meeting served as another strong signal for a stock market that has surged for weeks on rising hopes for more Fed action. The S&P 500 index is up 11.5% since the start of September. Quote, the stock market should continue to be supported by the positive comments from policymakers over the next few days, whatever the hell that means. And that was from Zach Pandy, an economist at Nomura Securities International, New York. Moving on to the next article, gold dips on uncertainty ahead of Fed minutes. So a lot of these changes in the economy, such as gold and oil and everything else, is depending on these Fed minutes. So it says gold fell on Tuesday as uncertainty over what the Federal Reserve will do to stimulate economic growth prompted investors to take profits. It said the top Fed officials downplayed the need for the U.S. central bank to resume buying government debt again to stimulate the economy ahead of the minutes of the Fed's most recent policy meeting, which will shed light on the likelihood and scope of renewed quantitative easing measures. Gold is cooling off a little bit based on the pullback of the euro and the fact that there has been noise from the Fed officials that we should not assume that there's going to be massive additional quantitative easing. Donald Selkin, chief market strategist of National Securities Corp, said. And you go down, it says spot gold was trading down 0.5% at $1,346.50 an ounce at 12:48 p.m. U.S. gold futures for December delivery fell $6.90 an ounce to $1,347.50 an ounce. It says bullion has not set an all-time high in 3 sessions after an 11-session run in which it hit 9 record highs. Going down here, it says investors took profits on Tuesday after gold rallied to a record $1,364.60 an ounce last week, as expectations the Federal Reserve would move towards further quantitative easing to bolster the flagging U.S. economy undermined the dollar. So it says oil dips as OPEC to stand pat, fundamentals weigh. Oil prices slipped a second straight session on Tuesday as OPEC signaled it will keep up output targets steady when the group meets this week, and investors worried about weak fundamentals highlighted by high inventories and lackluster demand. The U.S. Fed released, oh God, here we go again, minutes. As I said, it's like it's a freaking central bank. You know what I mean? It's a private central bank, and it's not a free market system that we're living in. So it's just so obvious, man. And I guess there's a lot of people that are aware that we're not living in a free market. They just don't want it. For some reason, they don't want to try anything that's new, whether it's a stateless society, whether it's a free market. Just let's not try it. Let's not go there. It's all the claims say it's been tried before. We've had no government. We've had a free market, and it just didn't work. We need to regulate it. We need government, and we need to be told what to do, and we need to have intervention, government intervention into economic policy. So just moving on here, it says OPEC revises higher its forecast for this year and next. This is from the New York Times and the AP. Says the oil cartel OPEC revised its forecast for growth in the oil demand slightly higher for this year and next, noting Tuesday that China's overheated economy remained a crucial driver for energy use in a world still struggling to emerge from its worst recession in decades. It says OPEC, which supplies about 35% of the world's oil, said the world's economy continued to expand at below average levels. It said a depletion of recession-busting government stimulus and sovereign debt worries in Europe still stoked uncertainty about oil demand and the pace of the global economic recovery. Said despite some turbulences and setbacks, the global economic recovery continues to provide support for oil consumption, OPEC said in its October oil market report, but it stressed that oil demand growth next year would be highly sensitive to China's energy policies, even as Americans' demand remain the wild card. Should China emphasize its energy consumption policy, the report said, then this move would negatively affect world energy usage. So, moving on, because I said we got a lot more to cover here. Food prices to rise globally as energy prices edge higher. This is from NaturalNews.com. It says rising energy prices and a shift to Western consumption patterns will continue to push global food prices higher in the coming decade, according to the annual agricultural outlook issued by the Organization for Economic Cooperation and Development and the UN Food and Agricultural Organization. Higher prices of crude oil are set to increase food prices, particularly in countries that import large amounts of food, or those such as the United States that rely heavily on petroleum-based fertilizers and pesticides. In addition, increasing affluence and the adoption of a Western diet in third world countries is expected to turn more land towards cultivation of animal feed and away from the cultivation of staples. As incomes rise, diets are expected to slowly diversify away from staple foods towards increased meats and processed foods, the report reads. Well, that can't be good. We're all living here in the U.S. and we're eating processed foods, and it's just an ugly scene, man. I mean, dude, just the literacy and the healthiness of the individual, 150 years ago was way better than it is now. And yet, if you turn on your news or your TV or you read a newspaper or a magazine, you will just be bombarded by this information from these institutions and these experts telling you that, everything's so much better now that technology is here and we're so much smarter and we have all these reasons to be, more intelligent, to learn faster and younger. And we should be super healthy and live super long. But, the reality is that this stuff is not for the little people. It's not for the majority of the people on this planet who provide most of the wealth and the labor and that. It's the less than 1% of people on this planet that basically profit off of all of us. And, they're going to live longer. The technology is going to impact and help them. And they're going to become more intelligent, and their offspring are going to become more intelligent. They're going to get taller and more healthier, and yet we're going to go and we're going to digress, and we're going to go in the opposite direction. We're going to become shorter, fatter, less healthier, dumber, and in a way, it's already happened. So I think if you just look around, you can see that what I'm saying, the argument that I'm making is actually already, it's true, it's valid, because if you just look around and you read read different information, you'll see that I'm right. It says commodities prices surge may be fueled by Japan, says proposals to throw part of Japan's trillion-dollar cash pile into securing overseas national resources raises the stakes in a global battle for strategic assets and the power that comes with them. If the world's second biggest hoarder of foreign currency reserves were to use chunks of that money to buy scarce global commodities, it could propel resources prices skyward, stoke world inflation, and lead countries to put up more barriers to such capital. You might want to come in here and check out this article. All the links will be posted. If you're a new listener, I post all the links in the description box. So usually there's up to 20 links there at a time, so with the headlines. U.S. cities face $500 billion of pension deficits. This is from Financial Times. Big U.S. cities could be squeezed by unfunded public pensions as they and counties face a $574 billion funding gap. A study to be released on Tuesday shows. Next one is senior citizens brace for Social Security freeze, cheaper whiskey, less giving. Seniors brace for a second year with no Social Security increase. Seniors prepare to cut back on everything from food to charitable donations to whiskey as word spread Monday that they will have to wait until at least 2012 to see their Social Security checks increase. The government is expected to announce this week that more than 58 million Social Security recipients will go through a second straight year without an increase in monthly benefits. This year was the first without an increase since the automatic adjustments for inflation started in 1975. I think it's disgusting, said Paul McNeil, 69, retired state worker from Warwick, Rhode Island, who said his food and utility costs have gone up, but his income is not. He lamented decisions by lawmakers that he said do not favor seniors. Says taking early retirement may retire memory too. I've heard this claim too, and when I see this this stuff, yeah, it may statistically prove this, but what they're showing you is that they're trying to raise the retirement age while at the same time cut the benefits. And if you can accept that, right, that information, that truth, and then go to another point, which is the way the system is set up, the welfare system, and that it's not set up for Social Security to help people in their retirement. That was originally set up in 1933 after 20 years from 1913 when the Federal Reserve Act was passed. We had went into bankruptcy, and in order to, it was the biggest, actually one of the first biggest bailouts, and they created the Social Security Act in which every person was born into this debt that was created since 1913 to 1933. So that's why it was created. And you throw in eugenics, and basically the bankers and the corporations that run the United States don't want you to live long and collect your benefits that you paid into. That money goes to the banks, and it goes towards paying off debt and the bankruptcy. So if you know that, then you would realize that, well, they don't want you to live that long so you can collect Social Security. They want you to be unhealthy and die before you even collect it. And that's why they're raising the age, and then they're lowering the benefits. So when you see this, it's to make you feel guilty or bad or whatever, and oh, maybe I should just keep working and paying my taxes so that I can, I can be healthy and have a purpose in life. Well, no, you can retire to have Social Security, and you can still, be a tutor or to get your associates, or maybe become a nurse while you're like 60 or 70. That's cool. Whatever. You're doing it because you want to. You're not doing it because you have to. There's a difference. 10 reasons why ordinary, hardworking Americans are about to really start feeling the squeeze. And it goes on and says, number 1, gas prices are going up again. Number 2, the price of food is poised to rise substantially, and in fact, it already is. It says it looks like those receiving Social Security are not going to be seeing cost of living increases again. Just covered that. Number 4, the cost of health care continues to soar into the stratosphere. Americans are already paying more for health care, and yet costs continue to spiral out of control. The cost of health care increased a staggering 9.6% for all U.S. households from 2007 to 2009. Number 5, American families could desperately use a recovery in the housing industry, but that is simply not going to happen. Says number 6, more Americans than ever find themselves unable to pay their bills, and increasing number of frustrated creditors are actually resorting to wage garnishment and debtor's prison in some places. Number 7, Ohio. Number 7, Americans now owe more on student loans than they do on credit cards. Number 8, even as expenses rise, incomes are down from coast to coast. So that's right, expenses are going up and your incomes are actually going down, and then you have inflation. So it's just, it's not good all around for the average person. Number 9, if all this was not bad enough, now are the rumblings that the U.S. Federal Reserve is actually thinking that we need more inflation. So number 10, apparently the U.S. government and many state and local governments think that this is a great time to stick it to the American people by hitting them with a slew of new taxes. And that's what they're going to do after the elections. After the elections, it's going to be hell. So finishing up here, just read the headlines. Canada Prime Minister says economy headed in the right direction. Well, that's great. 10,000 wait in line at Cal Expo and bid to save their homes. Moving on, states to probe mortgage foreclosures report is all over the news. Many 40 state attorneys general U.S. are expected to announce an investigation into the mortgage servicing industry on Wednesday. The Wall Street Journal said September. Fed appears ready to launch more monetary. French strikes disrupt life, shut Eiffel Tower. They're protesting against increase retirement age. HP cutting 1,300 jobs in the UK. Britain's property market on knife's edge as estate agents warn of house pricing falls. Bankers expect billions in bonuses. Wall Street pay a record $144 billion. 420 banks demand one world. Walmart's price chopping come to an end. Please check out the links.